Everyone, Paul here. Today I'm going to be talking about a new strategy. It's kind of a customized formula that I figured out for myself with 3 indicators, and it works really well. In order for this to work effectively, all 3 of these indicators need to line up with each other for the best results. It doesn't. I know you can find maybe 2 out of 3 of these indicators. When the signal's there for like at least 2 of the 3 indicators, it should do pretty good too. But today I'm going to show you how to set this up with the stock market. And you basically need to have your 90-95, the regularized moving average, and you also have to have the difference of 2 moving averages with 13 and 48. This is the setup, and we're going to be looking at the stock market to see how to set it up, how to find signals. Now, it works better. It works better for stock market because it's, it goes up and down and up and down. It's not volatile like crypto is. So you'll easily be able to pick up on these signals a lot more with the stock market because the stock market has more of a flow to it. But I'll show you how to set it up, and I'll show you how to look for the signals. We'll look at this on the long time frame. We'll focus on the day, and then we'll go down the time frames to see. And at the end of it, if I have enough time, I'll show you how to also, look on the longer time frames, but then find more scalps if you want to use it that way. This will work for doing it with options, and this will work for regular stocks that you just want to find the moments where they start going up. But let me show you how to set this up. Okay, first to set this up, you need to have 3 indicators. Now, what I'm actually going to do is we're going to set up the linear line strategy first. There's actually 4. What we're going to do here is we're going to set up the linear line strategy, which I've made separate videos on, but we want to go to linear line regression. We're going to take this one right here, and we're going to set it up. We're going to have to hide the candles. And basically you want to make your linear line something that stands out. And there you go. So you have it. Make sure you hide your candles. That's the first one here. The next one is you want to set up your 90-95. So I use Ghost Marker Pro, and I get the swing, and then I just check off the 90-95. You don't have to get Ghost Marker Pro. If you don't want to get it, then you have to go to CM EMA trim bars, and you're going to input that twice. You're going to put 90-95 on there, and that's the next one. The next one, you're going to get an indicator called the regularized moving average sweep. You're going to check that one. No changes to that one. And then you're going to go to your difference of 2 moving averages, and then you're going to input the settings 13 and 48, which is a pretty popular moving average strategy. Okay, so first we're going to be looking at this strategy, and there's many ways of finding signals. The first thing you really need to look at here is you need to make sure your 90-95, your regularized moving average, and your 1348 are matching. They have to match to find the best signal. To get the best result, they have to match. So what we want to do is we want to look at the moment when the regularized moving average is crossing with the 1348, and they have to be kind of matching each other. So we have to find those moments, and you'll use the linear regression lines to find those little scalps on the day. So basically, if you miss the cross, you can look at your linear line and get it in other moments of trades. But let's quickly look at the S&P 500 real quick. So we see that it crossed right here. So this would be, because what we could see here is it hasn't crossed up through the 90-95. It's already crossed. So you would only really need to be looking for the regularized moving average and the EMA difference to cross, and we see that it is a good trade. So it did, if you got in right here, you could have gotten down here if you looked at your linear line, but this one right here is still a good trade. So you can just come in right here and you can write it out till it touches the linear line, and then you know when to get out of your trade. So that one is almost a $20 difference in price. But let's real quickly look at another example. Now we know that looking at this, the trend is up, and it starts right here. And right here you start seeing the linear line crossing the 90.95. You also see the regularized moving average and the 1348 also crossing at exactly the same time. So you know this is a good trade. So if you came in from here, from when it crossed on the regularized moving average, and you wrote it out till it touches the linear line basically gives you the moment to get out of your trade. The whole point of the linear line is to show you the moment to get out of your trade. It works the best on a longer time frame. But we see if you did that exactly, you got in when it crossed on the regularized moving average, and you got in at the 1348 cross with EMA difference, it showed you when to get in. The linear line shows you exactly when to get out. So all these moments right here that you don't know when exactly to go back into your trade, you go back into your trade when the candles cross back up on the linear line. That's what the linear line is there for. It's there for to show you all the moments that you can get in. So if you ride this one right here, you would have been in profit right there. It's another $20 difference in price in 21 days. And then it goes down a little bit, then it comes back up through the linear line, and you can ride this up again until it touches the linear line, and you can get out here. This is a $28 difference in price in 34 days. You would have been able to caught that one. And let's see, did we do this one? Let's just do this one right here. So you get in right here. You get in when it touches the linear line. You made about $800 right there in 14 days. So right here, you see it go down. You never want to go against the trend. But then you see it coming back up. You see it crossing. See right here, you see it crossing. And you get the signal from the regularized moving average and the 1348 to get back in your trade. You get back in your trade here, or you can get back in your trade here. So let's go back and look a little bit more at some other signals. Right here, at this moment, we see it crossing. We see the linear line crossing the 90.95. We see the regularized moving average crossing, and we see the 1348 crossing. You see three confirmations. You see three confirmations that this is a good trade. So you come in right here and you just get out when it touches the linear line. It's 17 days worth, and you made about a $17 difference in price. You almost made about $2,000 right there. Let's real quickly look at some other examples. Right here we see it crossing on the regularized moving average. We see the linear line crossing up as well. And we see it crossing with the 1348. So this is another good trade right here. If you ride this out till here to here, till it touches the linear line, and this is a $23 difference in price in 27 days. So that's about $2,319 with one contract in 27 days. I'll do a couple more. We're going to look at examples of it going down, and then we'll look at some other scenarios if you want to do this on a smaller time frame. Right here you see it crossing down, linear lines crossing down. You see the regularized moving average is crossing down, and you see the 1348 moving average is crossing down. So this is another good point to get in. You ride it out. You ride it out till here and get a 3-day move. That's about $13 difference in price. It actually touches. So the next point to actually get in is to look at when the candle comes back down through the linear line, which is right about here. You can come in and right about here, and you can ride it out. In 18 days, you made about a $34 difference in price. So we see a brief moment right here. You see it crossing. You see the linear line crossing the 90.95. But this, in my opinion, is an example of a bad trade. You see it with the linear line, but it is late. It is late on the regularized moving average right here. So in this situation right here, I would not get in the trade because why? the signal of the regularized moving average is saying it's going up, but you're below the 90-95. So if you want to get in these trades, so let's say if you're going up, you don't want to be below the 90-95. If it's a good trade, you want to be up from the 90-95. In this situation, we're not above the 90-95, we're below it. It's still a good trade, but we're not above the 90-95, so I personally wouldn't take that trade. So right here we see it going down, and we see a good signal for it. So we see it crossing down here, linear line with the 90-95. Right about here, we see it crossing with the regularized moving average, and the 1348 is also crossed. So this is a signal of a good trade. And if you rode that out until it touches the linear line, which is right about here, you would have made a $51 difference in price in 31 days. So anyway, what I would do if you want to do it on a more intraday level, I would first identify the overall direction. I would look at it on a 6 hour, and I would look at the last couple candles, and I'd also be looking at the 90-95 and see what the overall direction is doing. But if you want to do a more intraday level, once you know the overall direction, you can go to a smaller time frame. You can do it on the 15-minute, which is probably what I recommend, is doing it on a 15-minute. And just do the same thing. You look for the linear line to cross through the 90-95. You look to see if the regularized moving average is crossing with the EMA difference. If everything is lined up, you should be entering a good trade. Now, doing it on a 15-minute, you might find more consolidation moments. So you do, what I would recommend doing is hitting that consolidation zone indicator, and it'll help you find moments when it's consolidating. If it's consolidating, then definitely don't take that trade. But anyway, this is a strategy to where you can find it. I recommend doing it on the day. Now with the day, you could, if you don't find the moments on the day, I would look at the linear line and seeing if the candle is, gone down a little bit and then gone back up through that linear line. So I prefer doing this on longer time frames. I get better results that way, but you can do this also on a intraday level by doing it on a 15-minute. But anyway, if you guys like this strategy, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.